Okay, good morning, everybody. In the
Good
last
morning.
session, good morning. In the last session, we have discussed IAS 23, which was about borrowing cost. Okay, therein we discussed, okay, the cost related to borrowing funds. Okay, the cost related in raising funds was uh, to be recorded in the books of account. Now, it depends whether it should be capitalized or it should be charged to PL. Okay, this was the case. Then we discussed that, okay, we have to understand qualifying asset. If that borrowing cost is related to qualifying asset, okay, let's capitalize, go ahead with adding that particular cost to the asset value. Whereas if that particular borrowing cost is related to not qualifying asset, okay, that is assets which are immediately available for use, okay, or for sale purpose, which are not, which does not require a huge substantial period of time to get ready. Then in that case, let's charge this borrowing cost to PL. Okay, we understood this, that borrowing cost is incurred and the company is required to pay as and when the loan is borrowed. Okay, but the question arises whether to charge to PL or to capitalize. Okay, so we have discussed this. Later, we have discussed one question regarding idle funds also. So herein I'll try an example which is given in your book also. Idle funds. If we said that if there is any idle money pending and it has not been used yet, it has not been allocated yet, then the company can try to, I would say, avoid opportunity cost, to reduce their opportunity cost by investing this idle money, okay, in some temporary investments, and then they can earn some decent amount, okay, during the period in which this particular amount is not being used, not being utilized, not being allocated. Okay, so regarding idle funds and borrowing cost, there is a good combination of question which is available in ACCA also in your normal financial reporting. If we study for any other I would say level, CA final level, then also this particular example is super common, super famous. Let's try that. IS 23 borrowing cost. It says that on 1st January 2006, Streeman's company borrowed 1.5 million to finance the production of two assets. Okay, so they have two assets and they have taken 1.5 million of loan, both of which are expected to take a year to build. Okay, so on this information basis, you can assume if it's taking approximately a year, you can say it is justifying the concept of substantial. Though, as you know, substantial period has not been defined in entire IFRS. Okay, still on an average, it's a general practice to take 12 months or above as substantial period. Work started during 2006 itself. The loan facility was drawn and incurred on 1st January 2006 and was utilized as follows. Okay, so they had their loan in the bank account and they withdrawn from bank from 1st January, okay, and started utilizing with the remaining fund invested temporarily. So for example, it's 1.5 million. Okay, that means 1 crore 50 lakh. 1.5 million is 10 lakh 50,000. How much is it? 15 lakh actually. It is 15 lakh. Okay, 1.5 million is 15 lakh. So they have got sanctioned 15 lakh in the bank account. Now they are withdrawing the same. Okay, on 1st January, they have withdrawn 250 and 500. That means they have withdrawn 2 lakh 50,000 and 5 lakh, okay, for asset A and asset B. Okay, later on 1st July, they have invested half of the amount, okay, and withdrawn on 2 lakh 50,000 later. So this first 6 months, they've only utilized 7 lakh 50,000 out of 15 lakh. This means 7 lakh 50,000 was still unutilized and invested. I would request you to try this question. For borrowing cost, try 9%. For investment income, try 7% rate. Try this question, then we'll discuss. Okay, any guesses how do you approach this question? You have borrowed 15 lakh, but you have used only 7 lakh 50,000 and remaining 7 lakh 50,000 you have invested and you are earning 7% on the same.
So interest will receive for 6 months.
Interest
We
will
will
receive, yes, yes. The temporary like interest on investment will be received for 6 months.
and 1 year we have to capitalize, but net of this interest.
Net of interest. Perfect, perfect. You have to calculate borrowing cost for the entire 12 months and deduct interest from investing temporarily for 6 months. Okay, the remaining extra amount that is 7,50,000, which was unutilized only for 6 months. That is at the rate 7%. Okay, for example, project asset A and asset B. If I talk about cost, okay, interest cost or finance cost, okay, it will be calculated. Herein it is 2,50,000 into 9%. Sorry, entire amount actually, because you are paying interest to the bank for entire 5 lakh rupees and for entire 10 lakh rupees, 10 lakh dollars. Okay, you will deduct, net it off with income on temporary investment. Okay, that is at the rate 7%. So you have invested only half of the amount because half of the amount is being used for that particular asset. 7% into 6 months by 12 months. Whereas here you have utilized 5 lakh rupees, 5 lakh dollars, whereas the remaining $500,000 are being invested at the rate 7% for 6 months. Okay. Okay. Tell me the amounts. 5 lakh into 9%.
First one is total 1,35,000.
1 lakh.
35.
1
First,
lakh 35.
first one, the interest cost.
Interest cost.
This is for entire 12 months, ma.
Yes,
15 lakhs
entire
into the
12 months.
interest.
5 lakh. 5 lakh into 9%. $45,000.
And this would be 90,000.
Which one?
The
This
next one.
one. This one will, yes, 90,000. Okay. So 1 lakh 35,000. Okay. Since it's asset specific, okay, and we exactly know what amount have been borrowed and invested towards which asset, okay, we have to calculate separately for each every asset so that we can understand, okay, how much amount to capitalize and how much to charge to PL. Temporary 2,50,000 into 7%, okay, divide by 2. That is $8,750. Okay, this will be deducted. So 45,000 minus 8,750, that is 3,6,250, $36,250. This is your net borrowing cost to be capitalized. To be capitalized. Okay, similarly here also You'll deduct 17,500 from this 90,000, and therefore your amount that needs to be capitalized will be 72,500. Okay. Now, how do you show this in your statement of financial position? Okay. This amount will be capitalized with the cost of the asset. What is the cost of the asset? Right now it is given 5 lakh and 10 lakh. They have borrowed 15 lakh. 5 lakh have been invested, have been allocated towards asset A, whereas 10 lakh have been utilized and allocated towards asset B. So what is the cost of the asset right now for time being? If we go ahead with the addition method, or you can say cost input method, the asset amount is, okay, asset A, asset side. Okay, if we talk about any A and B. So A will be shown at 5 lakh plus 36,250 will be capitalized. 36,250 will be capitalized. This means 5 lakh. This means 5 lakh 36,250. Okay, 536 250 plus 10 lakhs. Okay, and what is the interest amount? 72,500. So 10 lakh 72,500. Okay, so your asset will be shown in the statement of financial position at 16,750. Okay, 16 lakh 8,750 dollars. Is it clear? There are many questions like this wherein you are required to calculate. Okay, wherein you are required to calculate the borrowing cost to be capitalized, and therein a situation is given wherein there is idle funds available and they are being invested in the temporarily invested and are attracting a percentage of interest. Give me a quick thumbs up. Give me a quick confirmation. Are we clear? Good. Okay. 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 A quick question for you. We have tried this type of question. There are two percentages of loan. Okay. Okay. Any hints? Any I would say guesses? How do you approach this type of question?
So first we should exhaust the first loan that we got. Balance we have to take it from the next loan.
Okay.
So interest will accordingly be charged 10% or 9.5%.
Okay. Okay. Kishan, what about you? How do you feel? How do you go approach this type of question wherein there are multiple rates of loan given? See what happens when there are multiple rates of loan. For example, one loan has been sanctioned in your bank account, and secondly, again, the another one loan has been sanctioned in the bank account. Okay, now the money is there in the bank account. Now you do not know which, if you have withdrawn 1 lakh from the same, you do not know whether it is related to 10% or 9.5%. Got it? In this case, the first step is always to calculate average rate, weighted average rate. And how do you give your weights? You give your weights by their carrying amounts. For example, our carrying amounts in this case is 1,20,000 and 80,000. Okay, so 200. So out of 200, 120 divided by 200 and 80 divided by 200. Firstly, you are required to calculate average rate. Okay, try this. What is your average rate once you calculate the same? This is also very common question. Okay, so what is your average rate? Six lakh equal to 120. Okay, any answer?
9.8% approximately.
9.8%. Very good, very good. Your average rate is 9% and 9.8%. How do you calculate? 10% into 120 million divided by 200 million. These are the weights given. Whereas plus 9.5% into 80 divided by 200 million. Okay, so it's 9.8%. Now, by using this 9.8%, you are required to calculate the borrowing cost. How much amounts have been utilized? In that, you have to use 9.8% for capitalization purpose. The amounts that have not been used will not be capitalized. Okay, so capitalization rate is 9.8%, and then you calculate your borrowing cost using 9.8% and proportionate it if those funds are being used only for the, I would say, limited time period. Okay, if they are used mid-year and not for the entire year. Any doubt? Ishan, are we clear now? How do you get 9.8%? Good, good. Okay. Noted. Can I go ahead? A quick thumbs up, please. Okay, good. Okay. Now, next topic, last topic for borrowing cost, okay, that is yet to be discussed is suspension of capitalization of borrowing cost. We know when to initiate when there are three conditions satisfied. Expenditure should be started, okay, activity should have been started, borrowing cost should have been started to incur. Then only, if all the three conditions are met, then only you can start your capitalization, okay, of borrowing cost. Before that, in case if there is any amount incurred or paid, okay, to the bank accounts, to the to the providers of the loan, then in that case, what do? You charge to the PL. You start capitalization when three conditions are met. Similarly, when do you stop capitalization of borrowing costs? Okay, when either of the three activities stop. Got it? For example, the expenditure has stopped or the project has been completed. Okay, either of these activities, okay, gets triggered. Either of the event gets triggered. You have to stop capitalization. Now comes the question of suspension. Suspension means, for example, during the period there has been some break, some pause. For example, metro is being constructed, and due to some government dispute, due to some documentation dispute, the metro construction work has been stopped for 7 months. What to do? During this suspension period, during which the activities related to the project are not in progress, what to do? Should we capitalize, or should we stop capitalizing and start charging that 7 months interest to the PL? This is the question. Okay. So standard itself says that if it's an elongated delay, pause, suspension, if the interruption is a long period interruption, extended period interruption, then please stop capitalization, suspend for that period, do not capitalize. Whereas on the other hand, if it says it's a temporary delay, okay, time wise, very short period delay, okay, due to some technical administrative work, then you can ignore this suspension and you can still continue to, I would say, carry on your capitalization of foreign cost. Okay, note this, both the liners. Then I'll also explain you the another perspective of suspension. Okay, noted. Okay. Okay. For example, the construction work is going on, and for example, this is your Jan to December month period, financial year. Okay, just for an example. Now, due to some reason, okay, from 1st May till, for example, 31st July. Okay, for example, during this period, the work got interrupted. Okay, development work or construction work was put on hold. Was put on hold, or you can say uh, was interrupted. See, now what happens for this entire 12 months? you have to pay to the bank. The company has to pay to the bank for entire 12 months. Okay. The bank will not say, okay, you could not proceed your work. Okay, I'll give you some relaxation. No, it does not happen that way. Instead, the company has to pay for the entire 12 months to the bank. Okay, for the interest expense. Okay. Now, what to do of this capitalization? For these 4 months, you will capitalize. Okay, capitalize. Whereas here also for this period, I would say, okay, go ahead and capitalize. Okay, for this 5 month period also. What to do for this 3 months, May, June, and July? We have to see whether, okay, check reason. Check reason. If the reason is beyond control, or if the reason is within control of the entity, within control of the entity, beyond control of the entity or within control of the entity. Okay, beyond control means it is unavoidable. This is unavoidable. The company cannot avoid it. Whereas within control means if company would have taken the right measures, okay, precautionary measures, then company could have avoided it. Avoidable measures, avoidable reason. Okay, could have been avoided, could have been, I would say, uh, okay, could have been controlled if proper precautionary measures were taken in time. For example, there is a technical error, and for example, there is a machine breakdown. Now, in this case, the company could hire some engineers. Okay, they can keep in touch the experts. Okay, they can say that, okay, I want immediately available as and when there is any interruption in my uh, machines. Okay, I need immediate support, so they can hire some immediate support, some in-house experts, engineers, or they could do regular checking of their machine. Got it? There are some reasons which can be avoided. So if it's beyond reason, standard says that continue capitalization of borrowing cost. Whereas if the reason is could have been avoided but still it has incurred, then in that case it says suspend capitalization. And during this 3 month period, the expense will be incurred. It has to be paid to the bank account, but the IAS 23 says that do not capitalize, instead charge to PL. Instead, charge to PL. Suspend capitalization and charge to PL. Charge to PL for this duration. Okay, for interrupted period. Okay, example. If I talk about any example that is beyond control, for example, suddenly there was some COVID hit, and because of this, the government announced a full lockdown for 3 months. Got it? Now the company could not avoid it because was compulsory. It was given by the government, and it had impacted the entire industry and not just one company. Or you can say it's a macro factor. It's a macro factor, macroeconomic factor. Okay, which is affecting entire industry. Company could not avoid it. Okay, example, macroeconomic factor. Just an example, COVID lockdown. Okay, where is here avoidable? For example, labor strike or machine breakdown. Labor strike is micro factor. Okay, it is within the company. It is affecting only that company. It could have avoided if they have taken some right measures in time. Okay, right appraisals, right promotions, okay, increments, or they would have agreed to their demands. If yes, then they could have avoided it. Any doubt? If it's an elongated period delay, always stop, suspend capitalization. If it's a small temporary delay, then you have to check whether it's beyond control or whether it was within control of the entity. Please confirm, is it clear? Can we go ahead?
Yeah, but what is short term, long term defined?
No, the short term, long term has not been defined in IFRS.
But how do we come to a conclusion that this delay is short term ones and long term ones?
See, it is if it is a, I would say it it would require judgment of the management, firstly, of the accountant. Okay, it requires judgment. Secondly, the judgment can be based on, for example, how big the impact is. How big the impact is due to this, I would say, any suspension, any interruption. Is it hampering my entire business? Okay, with an extended loss, or is it impacting very little? If it's impacting very less for a very little period, then you can say it's not a long period, it's a temporary delay, and you can avoid the same. Depends upon judgment. Now, 2 months period can be, I would say, long for your industry. But for example, my industry is of railway construction, railway line track construction and all, or aircraft construction. Since it already takes huge period of time, these projects are of 5 years, 10 years, okay? Then, for example, a month delay might not matter much to me. Got it?
Okay.
Okay, it requires judgment. Thoroughly, the IFRS has never specified the time duration. Okay, even for the substantial period, if I talk about, the IFRS in the entire standard has never mentioned the period, but it's a general practice of taking 12 months for the substantial period. But herein, there is no such general practice that what period will be taken as extended period, long period. Okay, you can write over here judgment required. In your questions also, if I talk about diploma IFRS question, therein case study will be given and you will be required to answer with all your judgments, interpretations. Okay, numerical questions are very less. There is consolidation question. Okay, but more of it requires you to apply your theory of the standards. Okay, rightly to the case scenario. Okay, so we are, by this example and by this discussion, we are done with our IS 23. We can start with a new standard. Okay, that is IAS 38. IAS 38, okay, is about intangible asset. We have done about tangible asset, that is investment property and property, plant and equipment. Okay, intangible asset is little different and it is recorded under IAS 38. Okay, what is intangible asset? Cannot be seen, cannot be touched, it does not have physical presence, is known as intangible asset. Example, patent, copyright, you must have heard about the same. Now, very important, the standard says that intangible asset will be considered as intangible asset. Any asset will be considered as intangible asset if it is identifiable and non-monetary. Identifiable means it is separately recognized, it can be separated, it can be independently bought and sold. Okay. For example, it should not be clubbed with goodwill. Instead, there should be some separate asset. Got it? It should be identifiable. It should be separable. Okay. Individually and independently, it can be bought and sold. It can be recognized. It can be used. Okay. Secondly, it is non-monetary. Non-monetary means we do not know exact amount that will be encashed on its sale. Okay. If I talk about inventory is also non-monetary. Why? Definitely, whenever you sell inventory, you will get some inflow. But non-monetary says that non-monetary stands for the situation wherein we do not know exact amount that will inflow to the entity, the exact economic benefit that will flow to the entity. Okay. Um, Yes, because inventory can be sold at 100, 120, 150, 180, etc. It can be sold at 90, 85. So we do not know exact amount that will be encashed. So any asset which is separable and is non-monetary is classified as intangible asset. It should not have physical presence. It cannot be seen or touched. This monetary and non-monetary concept is also very much used, okay, during your standard, which is related to foreign exchange currency fluctuations. Note it down. Anybody, any doubt? Any doubt? Any cross question? Please ask. It arises from contractual or legal rights. Legal means as per law. Contractual means as per the contract is signed. Okay. For example, if you are working with any company, you might sign a bond that okay, for next 1 year or 2 years, I will give uninterrupted service. I'll not leave. Okay, I am bound to work with you. So you sign a bond. This is an intangible asset that the company has right over you. Okay, but it has a right. It has arose. Okay, because of the contract that you've entered. So this is known as contractual right. Okay, company has contractual right over the employee. Or for example, some actor or actress signs signs an agreement with the director, with the producer that okay, for this 1 year I'll give you this and this dates, okay, for this and this amount. Or for example, mainly it happens for the web series and the TV daily okay, wherein daily episodes are launched. So
But
therein
that
they
is copyright, na?
yes,
But that
that
is
is
copyright, na?
no, this is not copyright. You do not copyright over an individual.
But see,
Copyright is what? Yes,
but when see, I've also been under a bond with my previous employer. Okay, but that doesn't mean they can recognize that value in their balance sheet, na? Or my value in the balance sheet.
I agree. I agree. And we'll talk about that all intangible assets are not to be recorded in the books of account. Later, we'll,
But
okay,
if that contractual or legal right doesn't mean your assignment of any mining rights types.
mining rights. Mining
Ah,
rights.
see, government issues a right to mine a quarry.
That
So,
is ROU asset. It
uh,
is given on lease by the
correct,
government to
agreed.
the
I'm not really coming to the lease part. I'm coming if that has been assigned to another company, not the company which is actually taking into lease. It is subleased or the assignment of any legal right is being assigned. So can that is or it's also can it also be goodwill from mergers and acquisition?
because of the mergers and acquisition.
Goodwill arising
Con- Out of the
mergers and
contract, out of the merger contract. See, goodwill is also an example, and the bonds that you have created is also an example. And I'm why justifying? See, I'm not saying all, even the goodwill arises. Okay, for example, See, later also we'll discuss more that all intangible assets are not eligible to be recorded in the books of account. So though the employer has right over you, has contractual right over you, okay, and okay, the employee will be staying with the company for next
Ah,
2 years. Got it? They have contractual right over you. So it's an intangible asset, but the companies are not allowed to record that bond. Nowhere, they just document it in their files and all, but they never record in their balance sheet that okay, we have 10 employees and we have got a signed bond amount of, like, for
yes.
example, 10 employees, 10 lakh. They never record this. So again, IS 38 will further tell you that all intangible assets cannot be recognized in books of account. Got it? So the bond that you're signing is also an example of contractual right which is arising. It's an intangible asset. Okay, but due to documentation, due to contract, it cannot be recorded in books of account, but still it's an intangible asset. Got it? Okay.
So what about inventory wala
Yes.
part? Can you please repeat it?
What about
Inventory. Inventory.
inventory? See, there are two broad categories: monetary and non-monetary. Okay. So non-monetary means that there is an asset. For example, property, plant, and equipment. Okay, it's there with your company, and the WDV says it's 10 lakh, but you do not know how much economic benefit will be produced from this exact machine. Do you know exact amount today? It will be used for next 5 years. You do not know how much economic benefit will be realized. Secondly, you do not know if you sell this PPE today, exact amount that will inflow. When will you sell this machine? You do not know. So realization of this invested PPE, we do not know exact amount of consideration that will flow to the entity, when it will flow to the entity. Then these types of assets are known as non-monetary assets, even the liabilities. Okay. Whereas if I talk about inventory, inventory is very similar. See, inventory has been recorded in the books of account at cost or NRV, whichever is lower, with an expectation, with a prudence concept that okay, let's record it and do not record any unexpected gains, okay, or any expected future profits. Do not record them in books of account. Therefore, we always record inventory at cost or NRV. Are we clear till here? Okay. But in real, if when the inventory will be sold, it can be within next 2 days or it can take another 2 months. That too, whether it will be sold at 150, 180, 200, we do not know exact amount, at which amount it will be realized. So we say that in case if we do not know what will be the exact inflow, what will be the amount that will be encashed, okay, while disposal of this asset, then in that case you say that, okay, it's a non-monetary asset. So intangible asset should be non-monetary. It should not be that it has a very fixed amount and by selling this you will have this and this amount. For example, you have a copyright. If you go ahead with selling the same, you do not know exactly at what amount it will be traded. Got it? For example, you have a music company and you create some patents and copyrights. You do not know at what exact royalty, at what exact price it will be sold. Is it clear? Okay. And apart from this, monetary is contradictory. Monetary is exact amount that will inflow. If you have records made a sale of 1 lakh rupees and debited a debtor, created a debtor that okay, 1 lakh is receivable, you will receive 1 lakh rupees. But later, if there is any bad debt, then definitely you have to create a provision or you have to record it in the PN. Okay, but generally, whatever amount has been recorded is the exact amount that is expected to be received. So for intangible definition, you have to recognize any asset as intangible asset. If you cannot touch it, you cannot see it, it does not have physical presence. Also, it is separable and non-monetary. Separable means, or you can say identifiable means, it has some individual capacity. It can be sold and bought and sold independently. Okay, it can be used independently. Whereas non-monetary means you do not know exact amount that will flow to the entity. Noted also? Can I go ahead? Okay, good, Harishankar. Kishan, quickly confirm. Okay, good. Okay, then recognition criteria. You are allowed to record any asset in the books of account. Okay, if it will be used for a long period of time and it will give you future benefit. Secondly, the cost can be reliably measured. These are very equivalent. These are very similar to the PPE and investment property. Third is it should meet the definition of intangible asset. Then only you can recognize any asset, okay, in the books of account. Probable economic future benefit, that means if you use this asset, if you carry on to use this asset, then it will give you some economic benefits. Second, cost can be reliably measured. Thirdly, it should satisfy the definition of intangible asset.
Oh, one doubt.
Yes.
Like cost can be measured. Earlier we discussed that the value is not fixed for this.
Okay. Now, if you're recording any journal entry in your books of account, okay, you have to record it with some amount. Okay. Secondly,
Yes.
if I talk about inventory also, inventory is recorded at, for example, $100. For example, if I have a pen and pen is my inventory, and for example, this I have recorded at $100. Definitely, if you have any item in the books of account, it has a value. Either it's historical cost or fair value, but it has a value. It says that this amount has been recorded in the books of account with a value, but you do not know when it will be sold, when it will be disposed, okay, sold or disposed. On this disposal, what amount will be encashed? If you are selling this inventory worth $100, you do not know exactly at what amount it will be sold. Got it? Any intangible asset, for example, copyright, just copyright, okay? For example, you have purchased this copyright, okay, for $1 million. You will record this copyright at $1 million. This is the cost of purchase, the amount that you have paid to receive this, to recognize this copyright. But for example, if you are reselling the same, if you are reselling the same, okay, then you do not know exactly at what amount it will be sold. Whether you'll be able, because it's negotiable, it differs, okay, that too 5 months later or 50 months later, it differs. Got it? Somebody has a brand which year by year gets more mature and gets more valuable. Got it? So if you're selling a new company, you might be able to negotiate a little less. But for example, your company is super profitable and is 20-year-old, you'll be able to sell it at higher price. Got it? You will be recording it at cost, but what amount will be recognized, you do not know on reselling. Okay? This is known as non-monetary. This is known as non-monetary. Okay? Just a quick reference that you have to record it at cost, but you do not know what you will get on reselling. Clear?
Got it. Like for the
Good.
it's just like we have purchased for a particular price, but we don't know the what with the future sell price.
Perfect. Perfect. The definition says that the asset that has been recognized, okay, and for recognizing, you will be recognizing at some amount, that is your cost. Okay. But the amount that will be received later, at what date and what amount you're not sure, then it is classified as non-monetary. Okay. Coming back to the definition, it says cost should be reliably measured. You should be able to recognize that, okay, what is the amount that you have paid for its purchase, acquisition, or its building. For example, you are constructing the same. Okay, you are the one who is inventing the same. So you should know what is the cost incurred in the same. Okay, and it should meet the definition of intangible asset. That is without physical presence, identifiable, and non-monetary. Okay, next. If I talk about intangible asset, on the initial recognition, you have to firstly decide whether it has been purchased individually. For example, you have purchased a copyright, or because of some merger and acquisition, it has come to your company. Got it? For example, you are buying, for example, Geo company, and Geo company has a patent. Since you have acquired Geo company, and therefore their patent is coming in your company. Okay, so either you are buying your that particular intangible asset separately or as part of business combination. Business combination means mergers and acquisition. So either you are purchasing that asset separately, individually, or either you are making a business combination during which, okay, you are getting this intangible asset. If it is purchased separately, recognized at cost. If it is purchased under business combination, record it at fair value. Also record it separately, show it as a separate line item. Do not club it along with the goodwill. For example, on business combination, there are high chances that there will be some goodwill or there will be some gain on bargain. Either you will be paying something less or more. Due to this purchase consideration difference, there will be some goodwill or gain on bargain. Please do not club goodwill and any other intangible asset as one single line item in the balance sheet. Instead, under intangible asset, there will be separate line item, okay, goodwill and other intangible asset. Got it? For example, you have acquired patent during business combination. You have to record patent at fair value, okay, apart from goodwill. Do not club it along with the goodwill value. Example, it is internally generated. Internally generated intangible assets are not allowed to be recorded in the books of account. For example, you have a brand, for example, Domino's. Okay, any McD, Domino's, Levi's, any brand, Skechers, Reebok. You have a brand. Okay. Now, for example, I cannot do some calculation and say that, okay, my brand is worth 100,000 million. Okay, this valuation is done. Okay, for example, Deepika Padukone has this and this brand of cosmetic and it has a worth of this brand value. Got it? You do this valuation, brand valuation, but you're not allowed to record it in the books of account. Okay, because there are high chances that my balance sheet will not show the right figure. If I show $100 million worth of brand value in my books of account, okay, regarding my own brand, this will not give the right presentation to the investor because this is not realized. Okay, this is just an expected amount. This is unrealized amount. And as being an accountant following conservative approach, we never appreciate recognizing any unexpected gains. Okay, so any intangible asset which is internally generated, which is internally calculated, is present within the entity, okay, has been internally calculated and generated. These are not required to be calculated in the books of account. For example, Haldiram says that there is a Haldiram sweet shop and there is normal sweet shop. The sweet shop normally might be making 1 lakh sale per okay, per month, whereas Haldiram's is capable of making 1 lakh sale per day. Why this is happening? Because of the brand value. It has already captured its brand, okay, its market, with its quality, with its name, with its presence in the okay, in this I would say business since long time. Haldiram cannot record its goodwill, though it is getting benefit of their its own goodwill, okay, due to its quality, due to its presence, okay. It is getting benefit from its own goodwill, but Haldiram is not allowed to record its own goodwill. Are we clear? Haldiram has its own brand value, but it cannot record in the books of account. So if you are purchasing it from outside, individually purchasing, separately purchasing, you are only acquiring copyright. Okay, then record it at cost. If you are acquiring as a part of business combination along with other assets during mergers and acquisition, record it at fair value. If it is internally generated within the entity, okay, then do not record in the books of account. These are some, I would say, examples. Let's take a quick break and then we'll discuss what is brand value, mastheads, customer list, etc. Till here, any doubt other than this example? Is there any doubt? Good, good, good. Okay, 5 minute break or longer? 5 or 10? Okay, okay. Let's connect at 8:10 then. Okay, good.
Okay, let's continue. Okay. We were discussing that internally generated intangible assets are not allowed to be recorded in the books of account. Okay. Some examples are brand value, mastheads, and customer list. Okay, I'll give you an example regarding the purchase asset and the self-generated asset. Okay, if I talk about mastheads, what are mastheads? Mastheads are simply headings of any newspaper, magazine. Okay, magazine. Okay, for example, Times of India is such a big name. Okay, and it all whenever we talk about any newspaper, every slot, okay, is paid slot. Each and every small, even if you want to give small advertisement, if there is some news associated to the same, these are paid blocks. Okay, these are paid areas. Wherein, if I talk about the heading of the newspaper, okay, though it's a very big name, it's a brand name, okay, and it is printed on the top of the article itself, okay, that is of the newspaper, of the magazine, but it says that they cannot capitalize Times of India. Okay, mastheads means heading of newspaper. Okay, cannot capitalize. Okay, there are some footers given. Okay, header and footer given. In that header and footer, they provide website name. Okay, they provide their director or CEO name. These cannot be capitalized. Okay, so the header footer information that is of the company itself cannot be capitalized, though it might have such a big impact. Because the newspaper name is Times of India, it has more sale as compared to any other newspaper. There is Economic Times, there is Nav Bharat Times, okay, there is Dainik Bhaskar, etc. Okay, so these names are known as mastheads. These companies are not allowed to record their name. Okay, they are not allowed to record it as intangible asset. Next, if we talk about acquired or self-generated customer list, you guys must be having any loan amount or any credit card currently. Okay, so you must have noticed, you must have experienced, I'm sure, that if you have, for example, HDFC credit card. Okay, if you are a holder of credit card and you have HDFC Bank credit card example, then as soon as you get your credit card, okay, there are 10 more banks which will approach you and sell their credit card. ICICI Bank, then Kotak Bank, okay, SBI Bank. All banks will start calling you and saying that, okay, take our subscribe to our credit card. It is lifetime free. Okay, it happens. See what has happened. If I talk about credit card, okay, and we are tired of blocking them. Okay, so HDFC credit card, if you have HDFC records, okay, and I would say instead of records, I would say prepares. HDFC prepares, okay, a customer list. Okay, HDFC prepares a customer list. Now, since it is self-generated, HDFC Bank is not allowed to record in the books. Okay, HDFC Bank cannot record self-generated customer list in books of accounts. Okay, as intangible asset, HDFC Bank cannot record it. Why? Because it is internally generated, self-generated customers. Okay. Now, similarly, you must have heard about CRED Act, CRED. Okay, wherein you can record and enter all your details of all the credit cards, and you can pay from that. Have you heard about CRED Act? Yes. Okay. Now, what does CRED Act do? CRED Act is only allowing you to pay your credit cards to manage your credit cards. Okay. Apart from this, you are not doing any other transaction with CRED App. CRED App still provides you some vouchers on payment. It still provides you some cashback, some coin and rewards on payment. Please understand, CRED App, how is it affording to pay you some cashbacks and some payments? Any idea? CRED App has a business, I would say, setup, which is allowing customers to access the app to manage and pay all their credit cards at one place. Okay, this is just the service given by CRED App. By providing this, it is able to provide so many cashbacks and vouchers on payments. How? The CRED App main business is to collect credit card data, credit card holder data, and their repayment dates, frequencies, defaults, etc. Okay. Then CRED App sells to all other banks and institutions. This is how CRED App is working. Got it? The database is its asset. It is so valuable for the CRED App that it is making such a huge amount by selling it to other institutions. Okay, any banking institutions. Okay. Similarly, HDFC Bank also. HDFC Bank or CRED App, same thing. If they sell this same to any other bank, for example, other bank. For example, it has sold to ICICI Bank. Now, please understand. For this ICICI Bank, this is purchased customer list. Okay. And therefore, ICICI Bank, if it has purchased from HDFC credit card list or from CRED App, okay, anybody. Now the other bank, the ICICI Bank, is allowed, permitted to record customer list okay as intangible asset. Is it clear? Companies which are creating their own list are not allowed to record it as separate intangible asset in the books of account. Whereas if you have sold it off and if there is a buyer, then the buyer is allowed to record the customer list as separate intangible asset. Is it clear? Okay, quickly confirm. Okay, good. Clear? Good. Okay. Again, revising this, when you're first time recording in the books of account, you have to check how you have got this asset. If it's internally generated, never record. If it's purchased, let's see how it is purchased. If it is purchased individually, please record it as separate intangible asset, okay, at cost. If it is purchased as a part of the business combination along with other assets during purchase and acquisitions, then in that case, okay, record the intangible asset at fair value, which should not be clubbed again with any goodwill, if any. Okay. Now we come next to subsequent recording. What happens to subsequent recording? Okay, the company can measure and option is given to the company. Okay, if I talk about investment also, therein also, initially you always have to record it at cost, but subsequently on subsequent reporting days, company had a choice whether to record investment property at cost or intangible asset or fair value. Okay. Here also intangible asset can be either calculated and recorded at cost model, or they can follow fair value approach reval model. One condition that is I would say different for intangible asset is that intangible asset should have active market. Just an example, I have developed and invented a great pen, okay, super smart pen, which is capable of writing each and everything that I think. It increases my speed by 10x. So if I use this in paper, I'll never find a difficulty of not completing my paper in time. Okay? It is such a huge invention, great invention, that it increases my speed of writing 10x. And it is capable of writing as I think. I'm thinking something and it is capable of writing. It's a good pen. It's a great pen. It might have a value of 10 lakh, 20 lakh, 50 lakh. But there might be cases that we do not have buyers for the same. It might be cases that it's a very great product, but there are no buyers and sellers. There is no market for the same. Got it? So in case if there is no market available, we cannot recognize the fair value. We cannot recognize what is the on an average price that it is being sold at in the market. Got it? We can take the fair value of this calculator very easily, because we'll see and we'll go in the market. We'll ask 2-3 stationaries. We'll go on Amazon, Flipkart, and we'll see on an average what is the price that is being asked from the buyer. We can get fair value of the same very easily. Okay, fair value is recognized as per IFRS 13. That is fair value measurement. Okay, but here it says that there should be active market. If there is active market for that item, for that asset, then only you can go ahead with reval model. If active market does not exist, if buyers and sellers does not exist, you are not allowed to go ahead with subsequent model for the fair value model. Instead, you have to go along with the cost model itself. First case, for the subsequent recording, choice is given. Company can opt either cost model or either reval model. But reval model can be opted, fair value model can be opted only and only when there is active market present for that particular item. Is it clear? Good, good. Kishan, please confirm. Is it clear? There are questions, okay, there which gives you a case study and wherein which says that, okay, buyer, seller, and the market is not available. Okay, then you have to give your interpretation that, okay, if market is not present, then the company cannot go ahead with fair value model for the intangible asset. Okay, instead it has to stick to the cost model, despite IFRS gives a option, it gives a choice to either opt from cost model or fair value. Okay, so the more you learn theory, the more you understand theory and its application, it's easier to crack exam. Okay. Next. Now, how to do accounting for reval? In case if you are following reval model, subsequently either there will be upward valuation or downward valuation. Either there will be gain or loss. You have to account it similar to IAS 60. For the first time, if there is any gain, record it under OCI, show it under other comprehensive income. If there is loss on valuation, okay, fair valuation, again charge to PL. Subsequently, on next reporting days, when you're again going ahead with the fair valuation, okay, if there is a gain, do not directly charge to OCI. Instead, check if there is any previous year's reval losses. If yes, please reverse that first and then charge to OCI. Similarly, for loss, do not charge to PL directly in the second case. Instead, please look for it in case if there is previous year reval surplus, okay, gain on revaluations, have already been recorded in OCI, please reverse that off, and then the balance excess loss should be recorded with PL. Okay, accounting for reval, it is very similar to IAS 16, that is PPE. For the investment property, the subsequent revals, either gain or loss, it was always charged to PL. Can you relate and compare the subsequent model recording, PPE, investment property, and intangible asset? Are you clear with this? Good. For the investment property, we always charge to PL whether it's a profit or loss. It's a gain or loss. Whereas for PPE and intangible asset, we have to charge gain to the OCI, whereas we have to charge loss towards PL. Any doubt? Any cross question? Any doubt? Okay. Next, if we talk about goodwill, again, if goodwill is internally generated, you will not record in the books of account. You are not allowed to record in books of account. But if it is acquired as part of business combination, okay, then you can record it as intangible asset. Okay. And when does goodwill arise? Goodwill arises when purchase consideration is greater than net asset acquired. We'll read about goodwill more when we go ahead with the consolidation and group accounting. What actually is goodwill? Goodwill is the benefit, the extra benefit that the company is deriving, okay, because of its existing, I would say, good name, quality, fame. Got it? Which creates a huge impact on the business. So there is Reebok shoes and there is local company shoes. Okay, local seller is also selling some shoes. Okay, since Reebok has earned such a good trust and all, okay, that it is able to sell more items at higher value because its quality is trusted. It has earned customer trust. Okay, customer revisit. If somebody has taken shoes off or has used shoes of any particular brand, Reebok, Skechers, Adidas, then they always go back and fall back onto the same company, onto the same brand, though they might be little expensive. This is all because of the trust that it has created, the quality that it provides. And over the years, it has increased its brand value, which is highly impacting the business. This impact on the business, these hidden and embedded benefits are known as goodwill. Any doubt? IA stands for intangible asset. While writing answers, when you are specifically going for the whole paragraph writing explanation, do not use short forms. Okay, noted as well. Anybody, any doubt? Okay, good. Next. Okay, next is research and development expense. This is a very important, I would say, expense, which is considered under intangible asset. Firstly, understand and then I'll give you time for writing. What is research? Research is experimenting, applying, okay, doing many permutation and combination of theories that they have learned, of their knowledge. Okay, there is data available converting into some information, some valuable technique, knowledge, experiments. These are known as research expenses. Whereas development expenses are applying this research theory into practical. Okay, developing prototypes, then developing after finalization and correction, then producing the right exact sample. Okay, then mass production. This is all known as development. So research is about theory and experimenting, whereas development is applying those successful theories, okay, into practical and creating some prototypes, some samples. Okay. Now, as you know, in today's era, research and development is a very huge, critical, important, inevitable, unavoidable expense. Okay, because of this, so many companies have flourished, and people who are not advanced, who are not proactive in their R&D, okay, research and development area, therein they are backlashed. They are no more into, I would say, in the business, in the market. Very good example, very, I would say, profound example is Nokia phones. Earlier, 10 years back, okay, you could see that each and everybody had, if they had mobile phone, mobile handset, then it used to be of Nokia. Okay, there was a keypad coming up. Okay, there was a okay, each and everybody had Nokia. Approximately, I don't know the exact figures, but approximately I would say 75% to 80% market. Approximately the major markets were captured by Nokia phones. Do you agree? Okay. Later, a little later, when Android system kicked in, when touchscreen phones came up, therein the Nokia phones were not proactive. Instead, they did not switch to Android. Instead, they stick to their they brought their touchscreen phones a little late. Also, they stick to the Windows system. They did not switch to Androids. Whereas Androids, as compared to other other operating systems, they are more, I would say, user friendly. So what happened? Suddenly, you could see a change that Samsung and other companies, okay, came into the market, captured the market, and there was a huge shift from Nokia to other phones. Okay, since Nokia phone was not having a proactive research and development expense, okay, the company did not play, I would say, correctly used its research and development. Okay, did not quickly switch to Androids. Therefore, nowadays you could see out of like 1 out of 20 phones will be of Nokia. 1 out of 30 phones will be of Nokia. Otherwise, it's Samsung, MI, Oppo, Apple phones, etc. Okay. So research and development is very important, very crucial. Now, how do you capitalize and when do you charge to PL? Okay. Because if you're doing research expense and it might be of like $1 million, it might go to waste. At the end of like 2 years, 5 years, you can see that the entire expense has not brought in any successful impact. Okay, you have tried 10 different theories, but each of the theory is not practically possible, has brought you loss. It might have. So if it's a loss, then do you charge to PL? Or if it's a profit, then do you charge to PL? On what basis do you charge to PL? Okay, it says that for research expense, always charge to PL, whether it's profitable or not, whether it is providing and whether it is resulting into profitable output or not. Always charge to PL. Never capitalize and record it as intangible asset. Okay. Next, if I talk about development expense, you have to check whether the pirate criteria is met or not. If yes, then please go ahead and capitalize. Whereas, till the time the pirate criteria has not been met, we say that let's charge this development expense towards PL, into the PL. Okay. Now, what is pirate criteria? Now, again, if I talk about development expense, there will be so many samples created. Those samples won't be marketable, won't be up to the market mark. Okay, there will be many adjustments, many corrections required. So there might be cases wherein there are 15 samples created. Okay, or over the for example, the development is taking 5 years or 5 months, such a long period. During this, expenses are being incurred, but you're not sure whether it will give you economic benefit or not. The point in time, as soon as the company becomes sure, if I talk about company, by company we mean directors, management, appropriate authority. As soon as the management becomes sure that, okay, by manufacturing this exact product, we will be able to get economic benefits. We will be able to make this and this much of sale and this much of this profit. Got it? As soon as the point, this is the event, as soon as the management gets a confirmation that, okay, developing this ahead, manufacturing this ahead will give you economic benefit, then that is the point that triggers capitalization. What is PIRATE criteria? Let's read it. PIRATE stands for, P stands for probable future economic benefits that will be generated by the asset. I stands for intention to complete and use or sell the asset. The company has an intention not to withdraw in between, instead complete the product, complete the project. Thirdly, resources are available. It should not be like, for example, right now 4G, 5G are there into present, but I have developed, for example, a mobile phone or a gadget which needs 20G of my data internet speed. This is not technically feasible. This is not technically feasible if it requires 20G network, internet network. Everybody got it? Right? The resources that are available should be feasible, should be available. Whatever the resources are required should be available, and it should be technically feasible. Okay. Next, ability to use or sell the asset. Now, if I have created, for example, a pen which is super great, it is increasing my speed for 10x, but I should have some buyer, I should have some capability of registering this as my copyright and then selling it into the market, producing hundreds of more units of the same. Got it? It says that the company should have an ability to either use the asset or sell the asset. It should be technically feasible to complete the asset. Okay. For example, this requires such and such technology, which is 50 years in advance. Okay. For example, it will take 50 years to develop that technology. Last, expenditure can be reliably measured so that you could realize the cost. If any of the criteria is met, okay, actually all the criteria should be met. Sorry, all the criteria should be met. If entire PIRATE criteria is met, then only we'll say that let's capitalize the development cost. Till the point in time it is not confirmed, then till that point in time we will be charging the development cost towards PL. Is it clear? Generally, the question that tells you is about management confirmation. As soon as management confirms or directors are confident that, okay, they will be able to generate future economic benefits from that intangible asset, they go ahead with the capitalization. Any doubt in here? Please write it. Please raise hand in case of, or unmute in case of doubt. Have you noted also? Okay, now on this basis, we have an example. Can I go ahead? Okay. Doper company is developing a new production process. During 2003, expenditure incurred was $100,000, of which $90,000 was incurred before 1st December, and $10,000 were incurred between 1st December to 31st December. Okay, so there is, whenever multiple dates are given, I would recommend always draw a timeline. Always draw a timeline. Okay, what is your financial year? It is from Jan to December. So Jan to December is my timeline. Okay, it's my financial year. Now, coincidentally, my new production process has also started from 1st Jan itself. And during this, they have incurred 90,000 and 10,000. Okay. Doper company can demonstrate that at 1st December, the production process met the criteria for recognition as an intangible asset. So during this 1st December, okay, met recognition criteria. Met recognition criteria as an intangible asset. Leave this last line. Recoverable amounts of know-how embodied in the process is estimated 50,000. Okay, so if I talk about recoverable amount, that we'll understand. Okay, in the next session when we talk about impairment of assets. Right now, this last line can be. Now the question says that for this 11 months period, okay, they have incurred $90,000 as their expense. Whereas during this 1 month, they have directly said that $10,000 has been incurred as development expense. Okay. In case if the amounts were not given separately, then you would have bifurcated, okay, on the basis of 12 months and then divided and proportionated for 11 months and 1 month. Herein the direct figures are already given. As soon as the criteria is met, are you required to capitalize or charge to PL? As soon as the criteria is met, the development expense that are being incurred after meeting the criteria can be capitalized or you have to charge to PL. Good. Okay, Harishankar. As soon as the criteria is met, you can capitalize and add to the cost of the intangible asset. Okay, you can capitalize. Okay. Whereas the period during which the pirate criteria was not met, the recognition criteria was not met, you have to charge to PL. So 90,000 of development expense will be shown in PL, whereas 10,000 of development expense will be shown in balance sheet under intangibles. Give me a quick thumbs up. Is it clear? Any doubt? Good. Okay, have you all noted? Okay, next. If I talk about intangible asset, if we are required to calculate at cost, then similarly same capitalization and non-capitalization are there. We have to deduct trade discount, but we are not allowed to deduct cash discounts, if any. Okay, so purchase price minus trade discount or rebate that are available on the bulk purchase. You have to add back your non-refundable taxes because you have to add your non-refundable taxes because these are outflow from your pocket. If it's a refundable tax, record it as separate asset as input tax credit. Do not club it along with the intangible asset or tangible asset. Similarly, if there are any refundable taxes, record as separate asset. Separate asset, and therefore input tax credit. Okay, ITC. Next, plus directly attributable cost. Okay, any direct cost will be added up to ready for use, up to the point in time wherein the asset is ready for use. Okay, you will capitalize as soon as the asset is ready for use. You will stop capitalization. This is very similar to property, plant and equipment. Okay, good, good. Any doubt? Okay, next. Expenditure that should not form part of your intangible asset. Okay, this is also very similar to your PPE. Any startup cost, training cost, advertisement, promotional expenses, inauguration expenses, relocation, okay, allocated expenses. Only actual expenses should be capitalized. Allocated expenses should not be capitalized. Okay, these are some examples which are not allowed to be added to the cost of asset. Instead, they should be charged to PL. Okay, instead, charged to PL. Startup costs like any incorporation documentation, okay, any other prerequisite, training cost, training of staff. Okay, these are all costs without which the intangible asset can work. Okay, can be independently used. So these costs are not, I would say, direct costs. These are avoidable costs. These are not necessary to bring the asset ready for use condition. Ready for use condition. Therefore, these should be charged to PL. Anybody, any doubt, any question? Why we are not capitalizing? Because these are unnecessary costs which are not necessary for bringing the asset, okay, in ready for use condition. Okay. Okay. Have you noted? Can I go ahead? Oh. Try this. Apricot company purchases an operating license from an overseas supplier for $180,000 plus non-refundable purchase tax of $18,000. Okay, so it's non-refundable tax. The supplier's normal list price is $200,000, but it has awarded Apricot 10% discount. Okay, so what is your list price. Your list price is $200,000. There is a trade discount. Do you deduct trade discount? Yes, we are allowed to deduct trade discount. Okay, at the rate 10%. That is $20,000. Okay, so the purchase price is $180,000. Okay, this is your price that you have paid. Now, have you paid any taxes? There is non-refundable tax. If it's a non-refundable tax, you have to add it. Non-refundable tax of 18,000. Since it's an expense from your pocket, you have to add it back, not record it as separate asset. Okay. Apricot company has to pay import duties on the purchase of this license of 20,000. So they have paid import duties. For import duties, they are not given that, okay, whether they are refundable or not. Then in that case, we have to assume those are non-refundable. Okay. Add back this import duties that have been paid. That is $20,000. Next, as part of the purchase process, Apricot company seeks advice from a lawyer and incurs a legal fees of 15,000. Will this be legal fees added or not? Will this legal fees be added or not? Kishan says yes, it will be added. Harishankar says not to be added. Okay, see, it's a direct attributable expense. Direct expense. Okay. It's a direct expense. It should be added. That is of 15,000.
But it doesn't help in bringing the asset to the existence. Huh?
See, Apricot company seeks advice as a part of purchase process. The purchase process would have not been completed if the advice was not taken.
Okay.
Got it? See, this is directly attributable towards that process. Otherwise, if it says it's a normal, regular, fees given to the lawyer, okay, for legal documentation, then we could have avoided it. Right now, they are seeking advice for this purchase process. So, if they would have not seized taken the advice from the lawyer, okay, then this purchase process would have not been completed. Got it? This is direct expense. This is your directly attributable expense. If you have your notes, you can refer your property, plant and equipment notes also. Therein we discuss that if there is any professional fees paid, which is directly attributable, you have to add it to the asset. Please tell me the amount. Please tell me the amount. $233. So $233,000 is the amount at which this intangible asset operating license will be recorded. Okay, intangible asset, that is operating license, in balance sheet will be shown at $233,000. Directly attributable cost, any non-refundable taxes, okay, will be added. Also, you have to adjust for the trade discount. In case if there was any cash discount also, you would have not included. If there was any trailing cost, any relocation cost, then these expenses are not included. If I talk about testing cost, okay, will be included. Testing cost will be included. Okay, but if you are gaining any amount from selling this scrap value under testing items, will be charged to PL. We have already discussed. It same applies to intangible asset also. Okay, lastly, if I talk about amortization, okay, we'll talk about impairment later. Amortization. So for tangible assets, we use a word depreciation, whereas for intangible assets, we use a word amortization. These are one and the same thing. That means if you have booked an asset in the books of account, we say that do not charge it to PL in 1 year, because we are getting benefit over the useful life. We are getting benefit for next 5 years, 10 years, 20 years. Then since we are getting benefit for next 10 years, 20 years over the useful life, then you should charge to PL over the useful life and not charge the entire amount to PL in 1 year itself. Okay, because the benefits are divided, let's divide the depreciation and amortization also. Do not overload your PL, overcharge your PL in one single year itself. Okay. For tangible, we use the word depreciation. For intangible, we use the word amortization. Now there are two concepts. Finite useful life. Finite useful life means countable. The years can be counted. It is 2 year, 5 year, 10 year, 20 year, 50 year. Year can be counted. Life can be counted, estimated in number of years. Whereas indefinite means we are unable to count. Unable to estimate and count. Okay. Indefinite does not mean that it will last you lifelong. It has no end value. Okay. It has no scrap value. It does not mean that. Indefinite means right now for the current situation, we are unable to estimate and count its correct useful life. Okay. Now for this, if it is countable, then you go ahead with a systematic amortization. That means, for example, 5 years, then divide by 5 years and charge to your PL over the 5 years. If it's a 10-year life, charge over the 10-year life period. Okay, if the years are countable, charge an amortization towards PL over the useful life of the asset. Okay, that is in a very systematic way. Where if it cannot be counted, then do not charge amortization. Very important. Do not charge amortization. Check for impairments only. Check for impairment only. If there is any impairment, then you will charge that impairment loss. What is impairment loss? How to calculate the same? That will take tomorrow in our tomorrow's session. Okay. Any doubt in this? If it's a countable number of years, divide your amortization and charge towards PL each year. If you are not able to estimate number of years, do not charge amortization. Instead, check for the indicators of impairment. If yes, charge impairment loss. If no, then carry on with the same amount of carrying value for that intangible asset. Noted, can I go ahead? Last topic related to intangible asset. Okay, last. On derecognition. Derecognition means removing from books of account. Derecognition means removing from books of account, passing a reversal journal entry. Okay, if you are following a cost model, simply what you do, whatever the amounts that you have received, minus the book value, okay, the difference will be charged to your PL. But in case if you are following revaluation model, then you have to check if there is any revaluation surplus lying under OCI. If previously you have charged any amounts under OCI, please reverse that off. Please charge that to retained earnings on derecognition. The reval surplus was related to, for example, patent. We had patent in our books of account. It was purchased patent and therefore we recorded it as an intangible asset. For example, at 1 lakh rupees. Now, for example, in last 2 years, there have been some subsequent revals, and because of which now your asset is of 1,20,000 and 20,000 is shown in your OCI. In the third year, if you're selling this patent, if patent does not exist, if you're removing your patent from the books of account, then any revised surplus that have been previously recorded under OCI should also be removed from the books of account. It should also not exist because it is related to the patent, and since patent does not exist, the reval gain should also not exist. So in that case, you have to pass a journal entry, that is all the reval surplus, all the OCI item related to this particular asset will be debited and it will be clubbed with your retained earnings. Just to make it more clear, in your balance sheet, there is a heading equity. Under equity, we have equity share capital, we have preference share capital, we have share premium, we have retained earnings, we have reserve surplus, revaluation surplus. Okay. Now it says that instead of recording this reval surplus, separately regarding that asset, please record and transfer it to retained earnings, club it along with the retained earnings. It should not be recorded separately because the asset because of which this reval surplus happened is no more into existence, is no more in the books of account. Is it clear? So this is simply your reval surplus, which will be charged from OCI. It will be debited and it will be clubbed with the retained earnings. Any doubt? Any doubt? All good? Okay. Make sure you are making your notes simultaneously. Okay. If not yet made, please make sure that you are completing the notes. Okay. This particular PDF will be uploaded in the app and this lecture will be updated by this within 3-4 hours. Okay. So check that out in case required. Also, Kishan, you had some doubt regarding our first lecture. Please make sure you are sharing the screenshot. Okay. In the group itself, in the WhatsApp group, and I'll answer from there. Okay. Okay. Thank you so much. Have a great day.